Welcome to International Trade Minute Quickfire Trade News, presented by Reidel Law Firm. Dive into the latest international trade updates, regulatory changes, and market shifts with us every week. Designed for decision makers and strategists who value their time, this podcast delivers a concise snapshot of the week's most significant trade news. From export controls to trade compliance and strategies for navigating economic challenges, we're here to provide you with swift, insightful coverage that keeps you ahead in the global business arena. Whether you're managing finances, negotiating deals, or guiding your organization through international commerce, stay ahead with International Trade Minute. In the world of trade, every minute counts. Welcome. Let's dive in. In a striking disclosure, the Bureau of Industry and Security, or BIS, has reported a considerable number of end-use checks with outcomes that raised eyebrows across the board. In fiscal year 2023, an astonishing 24% of checks were flagged as having less than favorable outcomes. To our seasoned trade practitioners, this points to a significant volume of U.S. origin export-controlled goods falling into ambivalent situations regarding their final use. Analyzing the figures closely, BIS agents conducted a whopping 1,590 end-use checks, spanning across 62 countries. The fact that nearly a quarter failed to verify the end users as reliable recipients of sensitive U.S. technology underscores the complexity and risk involved in the global trade of controlled goods. This invokes pressing questions on the legitimacy and security of our export channels. Moreover, this pivotal revelation at the BIS annual conference further illuminated dynamic enforcement actions. The Office of Export Enforcement pursued over 330 investigative leads, contributing to a hefty toll of 240 illegal exports halted in their tracks and a whopping 465 nominations to the entity list, a record-setting enforcement cadence. The implications of this are far-reaching. Insightful trade practitioners will recognize that these checks are not just about compliance. They deeply concern national security and the integrity of international trade laws. In response to these startling outcomes, BIS officials are rallying for more resources, openly advocating for an increase in the agency's budget. It's a clear bid to equate their robust enforcement actions with the ever-growing volume and complexity of trade transactions. The underlying message? More resources equate to more thorough checks, which in turn could lead to better prevention and stronger protection of U.S. export controls. The emerging narrative is clear. The BIS is setting its sights higher. With additional manpower on the horizon, the trade community might expect even more scrutiny in the end-use verification processes. This serves as a poignant reminder of the evolving landscape of international trade and the heightened vigilance we must maintain. In the realm of technology exports, the due diligence process just gained another layer of complexity and integrity. At the annual conference of the Bureau of Industry and Security, a stark recommendation was tabled to effectively evaluate potential Chinese customers. The examination of Mandarin language sources is now being emphasized. Why this shift, you might wonder? According to a Commerce Department official, the discrepancies between the English and Mandarin versions of Chinese technology companies' websites are noteworthy. While the English versions tend to underscore civilian applications of their products, the Mandarin versions reveal a more nuanced narrative, often showcasing the dual-use capabilities suited for military integration. This is not just a small caveat. It is a fundamental reconnaissance resource in assessing the risk profiles posed by these companies. Let's consider the implications of these findings. For seasoned trade practitioners, understanding a customer's intentions is paramount when dealing with U.S.-controlled technologies. Now, coupling that with the risk of military diversion, especially in a country where civil-military fusion is a declared strategy, it becomes clear that what you see in one language may not fully represent the intended end use. Therefore, the takeaway from the BIS officials is unequivocal. Leveraging Mandarin linguistic skills or securing such expertise is crucial. It's about peeling back the layers to reveal a truer picture of the risks involved in tech exports. After all, an avalanche omission could result in your products inadvertently bolstering military capabilities. As we contend with technological evolution and its entwinement with global power plays, this enhanced due diligence is not just a recommendation. It's a shield against the treacherous waves of compliance risks in international trade. In a strategic maneuver that could redefine international financial transactions, China is intensifying efforts to fortify its monetary transactions against potential Western sanctions. This move comes as Beijing anticipates global economic repercussions should it undertake action against Taiwan. Researchers are casting a spotlight on the burgeoning RMB-based financial networks. These systems are conceived as alternatives to the dollar-dominated global financial system, which undeniably wields immense power in the sanctions space. The comprehensive report from the Atlantic Council, paired with insights from the Rhodium Group, breaks down Beijing's search for these alternative pathways. This isn't merely a matter of crafting a parallel financial structure, it is about crafting a robust, sanction-resistant network that can maintain access to financing and trade transactions in scenarios where Chinese banks face exclusion from utilizing the dollar. Undoubtedly, these developments have prompted a rethink of the enforcement strategy at the Office of Foreign Assets Control. Fast-growing digital and traditional domestic and cross-border payment projects that bypass the dollar are becoming increasingly sophisticated. A noteworthy observation made by Josh Lipsky from the Atlantic Council pointed out the urgency of these networks scaling up and the pivotal role they could play for China in a crisis. Digital currencies and instantaneous settlement mechanisms that steer clear of the dollar present a particular challenge. They may render the current enforcement and surveillance practices of sanctions less effective or indeed obsolete. Countering these alternative networks could become key to future sanction enforcement strategies. Amidst these discussions, it's prime time for policymakers to assess the implications of these alternative networks, which, though not yet in the spotlight, are undeniably inching towards operational readiness. The potential shift in power dynamics these networks may bring about underscores the need for discerning foresight and comprehensive planning to uphold the integrity of international sanctions. In the current geopolitical climate, the question of Europe's potential response to a Taiwan conflict remains a pressing topic, and policymakers are taking heed. Amidst concerns about a Taiwan invasion, the European Union's unity in its sanctions approach against China is quite the conundrum. The fabric of Europe's potential response seemingly weaves in different directions as divisions within the EU cast a shadow over a unanimous front. The dilemma revolves around the fact that while Europe stands divided on various fronts, the gravity of the situation calls for a combined stance, a united sanctions regime against China that echoes the bloc's collective clout. The nuanced positions held by individual member states could tilt the scale in enforcing significant sanctions, should the need arise. Experts in the field, including those from well-regarded think tanks and institutions, have been deliberating the probabilities and strategies. In a striking revelation, a high-level EU official has indicated that despite the varied stances, they would play the European card, adhering to a larger consensus when it comes to sanctions, reiterating the sentiment that there is no alternative to unity in the face of adversity. Reflective of the EU's internal discourse are the markets, ever vigilant, parsing every nuance and geopolitical shift. The experts intimate that the immediate fallout of an invasion would likely see a tightening of US dollar liquidity and a consequent squeeze on Chinese banks' access to dollar funding, mirroring the response playbook used following recent global events. As international trade practitioners, understanding the echelons of possible European actions is vital, as is remaining abreast of market anticipations. The notion that Europe could speak with one voice on this critical issue forms an essential part of sanctions risk assessment, and potential compliance strategies must evolve as the situation unfolds. This possible united front represents not just the political will of European nations, but also a response that could carry significant weight in the arena of international trade sanctions, reshaping trade interactions and necessitating a strategic recalibration for all involved stakeholders. In an increasingly interconnected world, where advancement in technological innovation continues at breakneck speed, freight forwarders are finding themselves front and center in the complex dance of export compliance. Recognizing the pivotal role played by these entities within international trade, the Bureau of Industry and Security, BIS, has sharpened its focus on this key sector. Just last week, updated freight forwarder guidance was published by BIS, echoing the augmentation of responsibilities and the expanding purview of due diligence required within the trade ecosystem. What's at stake? The intention is clear. The guidance aims to tighten the noose on export violations by sketching out a clear blueprint for compliance. Forwarders are now armed with an updated index of red flags to monitor and best practices to adhere to, ensuring full navigation through the murky waters of global trade regulations. For these intermediaries, the role transcends merely transporting goods. It's about embracing compliance as a fundamental cornerstone of their operations. Matthew Axelrod, the top export enforcement official at BIS, emphasizes the critical importance of compliance over profit in the export industry, stating that the stakes have never been higher. BIS's updated Don't Let This Happen to You document aims to educate and warn companies through examples of export control violations. It highlights the agency's focus on voluntary self-reporting as a key measure of industry compliance health. Despite adjustments aiming to balance penalties and incentives for cooperation, BIS notes a steady rate of disclosures alongside an increase in reports of severe violations, aligning with Axelrod's commitment to rule observance. In the long term, this is more than just operational reform. It's about fostering a culture where compliance and transparency are not merely regulatory requirements, but foundational values that underpin the entire trade community. Exporters of such technology need to be acutely aware of this policy. Once their products reach Chinese shores, control over the end use can become a nebulous pursuit. This isn't merely speculation, but a pivotal part of China's publicly stated strategy. The implications extend beyond intellectual property theft to matters of global security and the balance of power. Therefore, the U.S. and its allied trade partners are watching closely, reinforcing the need for robust end-use checks and due diligence. Where might this lead? For businesses, especially in high-tech sectors, it necessitates a rigorous reevaluation of export strategies and partner vetting. For policymakers, it's a clarion call to advance discussions, treaties, and controls that match the pace of this fusion doctrine's potential impact on international trade and security dynamics.
In this episode of International Trade Minute, we explored BIS's latest findings on end-use checks and the need for resource expansion, emphasized Mandarin proficiency for due diligence in China, and analyzed China's financial network's impact on sanctions. We also examined the EU's potential actions regarding a Taiwan conflict and highlighted BIS's updated freight forwarder guidance for improved compliance. Thank you to our listeners for your dedication to staying informed. Your expertise ensures the ethical and efficient operation of international trade. We're grateful for your trust in Reidel Law Firm to provide sharp insights into international trade law. Thank you for tuning into International Trade Minute. Today, we've provided essential clarity on complex trade news to keep you ahead. Knowledge grounded in trade insights is crucial for professionals like you. Join us next week for more in-depth analysis aimed at refining your decision-making. Continue to navigate the global market confidently, ensuring your strategies remain compliant and sharp. Stay ahead of the curve. See you in the next episode.